Hi everyone, welcome to this week's edition of Midweek Market Update. I'm Ashley Rosser with Victory Fiduciary, and welcome to the first video of 2022 that we are doing for our video series. So really happy to have you here. Thanks for joining us. It's really been an eventful first couple of weeks for the year of 2022 when we look at market actions that have occurred. And so it's been somewhat of a rough ride for investors. So across the board, we have seen really areas of decline in all of the major indexes. NASDAQ, which would be small cap stocks, particularly being hit in this pullback that we're seeing, where we hit correction territory yesterday. Correction means that we've seen a decline of over 10%. And so the question that investors are asking, is this just kind of a necessary pullback and a breather the markets needed after the run that they had last year? Or is this kind of signs of something that is more serious, and are we starting to see a rotation, particularly from growth to value? So the areas of value seem like they're holding up a little better than those big tech and growth areas, which really led the way last year. And that's likely a result of inflation continuing to kind of weigh on investors' minds, and investors kind of wondering, is inflation going to be more of a nuisance than we had originally hoped? And so we know that inflation always kind of winds up eroding earnings and really can stagnate growth. And so inflation, we were hoping, was going to be transitory. Federal Reserve kind of has been trying to reassure that this is likely going to pass in a result of kind of bottlenecking that we saw within supply chains and other issues that we're still kind of coming out of this pandemic. While we continue to kind of see these signs that inflation is going to be more nagging, and that's really weighing right now on investors, particularly the minutes that came from the Federal Reserve Summit last week, where hinting to the fact that they may have to be a little more aggressive with rates if inflation kind of continues to grow out of control. And so these are likely some of the reasons why we're seeing some of the areas of rotation that we are trending in the market right now. So the question on everybody's mind, including mine, is, is this going to be a permanent rotation, or is this, again, just kind of a pullback? And so we're going to kind of get into this. But you may have heard the adage, so goes January, so goes the rest of the year. And the premise behind it is that 75% of the time, you can look at your returns in January to know if the rest of the year is going to be positive or negative. Now, we're going to be hoping for that 25% of the time this year, because it looks like January will likely be negative across the board for the major indexes. However, we're going to get into the numbers specifically to kind of break that down and show that maybe it's not always that reliable. And so just here showing percentage of the time that January is positive versus when it's negative. So overwhelmingly, it's typically more positive than negative, not always. And again, about 75% of the time, this kind of works, where we can assume what the rest of the year will look like. However, if we look back more recently, it's actually been more or less telling. And so if we look back as recently as 2021, January's return, last January, returned a negative 1.1 for the year, and for the month. And we know that markets were absolutely positive for the year, so that time it didn't work. 2020, it was down just slightly, 0.2, had a return of 16.4. 16 was down negative 5% for the month and was up 15.4 for the year. And then 15 was down 3.1, was up 2.5 for the year. 14 down 3.6, was up 15.5, 2010. And so particularly very recently, we can see that it's not always right. So it'll be interesting to kind of see, we have a lot going on geopolitically. We're still kind of dealing with some of the repercussions from just the pandemic and some of the interventions that were made, seeing these bottleneck issues that were kind of tertiary to areas of what pandemic affected with supply chains and things. So it's going to be really interesting to see kind of where this all settles out. And so that's where the technicals are really going to be important for investors to kind of monitor closely. And so here, a chart of the S&P 500, just kind of want to show you, just with the declines that we've seen since the beginning of the month, what it really did was it brought us back. So this trend line, bringing us back to the trend line, back into the declines of October, if you'll remember. So where we are now, that it's likely after this week's actions, we will have erased all of the Santa Claus rally that we saw back in December. But for now, it is at least trending on this line, although I'm going to show you that we have begun to violate those first lines of support that we talk about. So let's what I'd like to do now, we're going to switch gears for just a second. Okay, and so just looking back here, so the S&P 500, kind of looking back 6 months. So our blue line here is going to be our 50-day moving average. That typically acts as lines of support. You can see multiple times that, we hit it and then we bounce right off of it. However, back in October, we violated it, and again, we've now violated it again. So this is going to be really important to pay attention here, is can the markets now be able to kind of get enough traction to be able to then kind of hop back above that line of resistance to go on to make new highs again. And so this right here is going to be our 200-day moving average. So still have a bit of risk here to our next line of support, which would be the 200-day. And so really important here again to just kind of pay attention to what's happening and looking to see kind of in the next, week, 2, 3 weeks, kind of what markets do. Are they just going to churn and grind for a little while, work off some of this additional excess? Although relative strength here is sitting at 38%, which is fairly oversold at this point. Remember, anytime we get above 70, we can always kind of assume to have some short-term kind of pullbacks or breathers. But the fact that, we're still in this decline, we started with an RSI that was just really above 55, so we weren't very overbought when that decline began. So again, interesting, RSI in the 30s, so we'll be watching it. We would expect to probably see a bounce at some point, but again, sometimes markets don't always act exactly how we expect them to. Now, what I would like to also show you real quick, just kind of what's going on with the small cap space here. So if we look at the Russell 2000, I just realized, and I misspoke. I said that the NASDAQ was small caps. NASDAQ is tech, and the NASDAQ is the area that we've seen that 10% correction. So then if we look, though, now at the small caps and kind of what's going on with them, small caps, very kind of similar story. Now, we have violated both the 200-day and the 50-day moving average on that end. So we really need to be watching small caps. They're kind of getting beat up here. Again, their RSI is sitting at 33, so kind of in the same area that the S&P 500 is. Something to watch. Again, we were very deviated here, so here it'll be interesting to kind of see if small caps can kind of hop above the 50-day and the 200-day. They did cross here, so just something to kind of show that we've seen some consolidation and less market movement upward. So we're going to have to keep an eye on that. And then the last thing that we're going to just take a look at on here is just taking a look at the NASDAQ, which would be tech, large tech mainly. So again, we violated our 50-day, really just sitting on our 200-day moving average. Again, we've seen now a decline from the start of this to 10%. So again, we're really just kind of seeing across the board areas of the market are absolutely pulling back. And so the question just remains is kind of at the end of this, where's the dust going to settle? How much of this is just kind of investors being spooked? Markets were very extended kind of coming into this year versus are we going to begin to see some areas of movement and trend changes? And again, we won't know that until we can kind of begin to kind of get further in this. Now, when we look at dynamic asset level investing, which really just tracks areas that are kind of showing stronger momentum, particularly in the sectors, still not a ton of reversion or change. Financials is still number one. Now, energy is one of those real volatile spaces that we can kind of see movements, and this is specifically with some of the movements that we've seen with oil. So energy's kind of moved up quickly. And then we have technology kind of hanging in its third position. Remember, NASDAQ is going through this correction, still kind of hanging on, has lost some buy signals, so we'll keep an eye on that. Typically, though, over the long term, tech is usually still a good hold to consider. And then we have consumer cyclicals, industrial real estate. So haven't seen a ton of changes. Investor greed really still remains extreme here, which we typically see in market cycles that are still kind of bullish. And so When we talk about extreme greed, though, it's also kind of the time that we should still be paying attention. Now, we've had our greed index has kind of been off the chart, though, for months. Every now and then we pull back. So back in October, we actually pulled back all the way here, then very quickly went right back to extreme greed. So really need to, kind of look at all the pieces together. Markets have pullbacks and they have corrections. So the important thing is to be able to kind of look at the technicals and kind of look to see, is what we're seeing kind of within the realms of normality, or are we really seeing a movement that is kind of off the cuff and kind of where we would not necessarily expect to see it? And so that's what's important. So right now, I would think that the most important thing for investors to be considering at this point is just looking at your portfolio. Make sure that you know why you have the holdings that you own currently. If those areas are not working for you and they haven't been working for you, you may want to consider, is it fulfilling the purpose that I have for it right now? If it's not fulfilling the purpose, then, every allocation really should have a job. And so if it begins to fail that job, that becomes the question, what do I want to do with this? Is there something else that may be performing that job a little better for me? And so I would just say at this point, just trying to kind of pay attention. Good time to take a look at your allocations, make sure that there's a purpose for them and that they're fulfilling the purpose for you. And so always, if you have questions, you can always reach out to me. So my email is ashleyr@victoryfiduciary.com. Here is our website. You can kind of go back and look at some other videos that we've done recently. And then our phone number, you can always give us a call. We're always happy to help if you have questions. We really do. It is our pleasure. So thanks for joining us. Looking forward to some of the exciting things that we're going to be bringing this coming year. I wish you and your family well, and we'll see you soon. Thanks. Have a great day.